Good early morning and welcome to your daily dose of Coney and Misty back doing two together. Okay, why isn't that taking? Oh, I may have it on the other page. Yeah, that's why. I use two monitors here in OBS and keep things out in the second monitor and drag them on. Okay. So I wanted to do a little teaching like I do a lot of times. So first let me give you the stats and then I'm going to give you an interesting dynamic because I see all kinds of stuff talked about on Reddit, Yahoo Finance. People still don't really get it. So let's talk about what the closes were. So yesterday, coin, right? Coin doesn't give a dividend, so coin doesn't go through any of this confusion. So coin was up to 226.93 from 223, right? I think it got to 235 because I own some coin and I sell calls against it. And when it doesn't get called out or I choose to buy it back for a small premium, then I rewrite the call. So last week I had a 240 call on. Well, it didn't get that close to selling. So when this ran up to 235, I sold 510 this coming week contract at 605. And then it closed around 3. So I'm hoping that it goes to 237, 238, and I can just write another 240 out a week. Eventually I'll get called out, but I always have the choice of buying it back. But here's where I wanted to educate you. So, okay, so we're up 1.65%. Look at Coney. So someone said, oh, well, Coney's down 7.87%. Not really. Well, what do you mean, not really? So remember, whenever this is true for any dividend. I don't care if a dividend stock pays 5 cents. You know, you don't notice it. But just the way stock exchanges work, when a security, a stock, pays, or an ETF pays a dividend, they then reduce on the opening that stock by that much. The reason I know that personally and experienced it was I may have some option plays on, or I may be wanting to buy or sell that, and literally I'll get a message from my broker, we readjusted your sell price by the amount of the dividend paid out so that it reflects that, right? So everybody knows about this, but for some reason, some people just have a hard time arguing, well, no, it really doesn't. Well, yes, it does, but let me give you the nuance. This is even a further detail. So I always say to people, well, the open reflects it. And then somebody will go out to Coney and say, well, no, it opened at this. It didn't open down $2.28 at 22.62. And they're correct, but only because Coney trades in the pre-market, right? So for those of you that don't because I had somebody ask me about the aftermarket. So there is a pre-market, and by the way, I don't recommend you use those or do much there. There are a period of time, and different brokers allow you to trade at different time, but there's just a certain amount of time that the aftermarket exists, and then various retail brokers say, okay, well, we'll allow you to trade all and only certain stocks, for instance, OTC stocks, right? If they're not a NASDAQ, American, or New York Stock Exchange, they're not trading in the pre-market, right? Options don't trade in the pre-market, but many stocks trade in the pre-market. So what happens is BTC is moving up in the 24-hour cycle. So Coney and Misty and other stocks are, or there's some retail jobs report, or there's some kind of news, and that causes stocks in the pre-market to open up a little bit. Normally, if there was none of that and the pre-market wasn't open, Coney would have opened at 22.62, right? Would have opened is the dividend amount from the prior close, which was 24.91. So what was the open on Coney? It was like 225.84, right? because the pre-market moved it up. Okay, but that's trading that moved it up, not because of any other reason. Remember, trading can move it down further than what it's supposed to open. So anyway, I just wanted to point that out, because go look at a chart, right? Here's my cony chart here. So look at this, right? It says it closed at 226.93. Here's the open. But do you notice this right here? 165, or sorry, that's coin, and I want to look at cony. Sorry about that. Okay. So I want to look at cony, and someone could say, cony didn't move up 1.42%, right? It's down. It closed 24.71. But remember, it was set to open at 22.62. So I just showed you the math here so that you understand people aren't playing with your mind, right? And I did it on msty when I covered that. I just wanted you to see it, right? This is what it's supposed to open on, but because the pre-market had it bidding up, right? This was the scenario. So where do they get the one? If you use the decimal places here, and I make this like, you know, and I include them, you'll get to the, actually the 142 matches exactly the prior chart, right? There's your 142. I was worried. Sometimes when you don't use 2 or 3 decimal digits, you don't get the exact number. So enough of that. But let's get through this. So there were no trades, okay, on 5/6. I think there were some shares bought. There was 650,000 shares. That's a lot, but in particular, that would be a lot for a cony, right? That'd be like 15%, 18%. Sorry, for msty. But this stock is more mature, been around longer, has a consistent performance, right? So the cash went up. They just didn't deploy the cash yet, okay? So what else is going on? The prior trades, these are, I moved to my May tab, right? I had all this stuff in April, and now I start tracking everything in May. I just move over. So we're now on a running total in the payment tab. We have 18,800,000 up 650. So that put cash in their pocket, so you can expect some trades tomorrow, okay? And the bulk is 6.5 of our 6.62 or something is made up of one strike price. So Mike G, no, there's no collusion, okay? Nothing wrong with thinking that way and questioning it. But first off, where do these guys even do their trades, right? A lot of people don't understand that all of these options that they do are in an options exchange called Flex. And in that option exchange, you have to promise on any period of time that you're going to do a minimum of 150 option trades. Well, think about the kind of capital you have. You know, when I do coin, I do a couple of contracts. It's like 200 shares, right? So that's $50,000, just that. So you have to have margin and cash in there. So that's why they keep all their money in the treasuries and they play these sophisticated option scenarios, right? That way they don't have more than 10% in a single stock. They just have some money in the options on that stock and a whole lot of cash. So anyway, it's a lot of money. So the average person can't even put on these synthetic plays, right? Even if you knew how to do it. And what else does Flex give them? Flex options, which I don't use Flex, I just use standard options, right? When I use my options, if I sell a put or I do something like that and it goes against me, they can early assign, it's called assign, when the other party that owns the other side of that option trade decides to sell or take it, right? I sold it and they want their profit because it's gone against me. So in the middle of that period of time while I'm waiting, they assign it. Well, they can't take ownership, they being Yielmax. They can't own the underlying stock or that would kick them into having too much of their money in a single stock. which is against the SEC rules when you have an ETF. An ETF is you spread your money out across multiple stocks. Well, they're only using one stock, but they're only using a sophisticated option strategy. So their position is very small versus the amount of cash that the fund has. So anyway, sorry I went into all that, but I see people on boards all the time that, you know, they want to argue or they don't really understand. If you read all this stuff and you're literate in options, and you understand exactly what they're doing. So anyway, I won't belabor it too much. So where's our position? So Mike G had asked me, great question. Bruce, you know, you said they're all in weeklies and one strike price. Why would they do that? You know, is somebody giving them payola? You know, is there under the table? No, that doesn't really happen. But somebody is in a hurry sometimes to roll out of one and roll into another. And if you look at options, let me educate you guys a little bit. So here's coin, okay? When I'm looking at it for my own personal, right? So let me move this over. So here's coin. So this is what, I have a position here, right? And so right now this closed between 3 and 350, but now they took away the low and high for the day because we're already technically into the next day. So I got my trade off at 605, right? For a 240 expiring, all of these are for 510. But the bottom line is options have a tremendous amount of range that are involved, right? So these guys have, look at this, open interest. You know, I only have a couple, but here's the 240, and the open interest is there's 4,000 option contracts. Each option contract is 100 shares, right? At $240, right? So that's 48,000 that you're playing with in stock, just in that one option trade. So the idea is that they go into these, and what happens is, depending on where the stock's trading at, they get the most bang for the buck at that. But personally, I think they ought to spread the risk a little bit more, okay? So, you know, I don't remember. Let's go check and see what they sold this for, okay? So they sold all of these guys, and they got $3.32. So that's it. If they went to a 240, that would have dropped them down to maybe $3, or they went to a 250, it might have been $1.50. So they wanted to get as much, you know, they have an idea of yield. They're like, okay, we can keep paying this cony range of $2 plus on the good months, so we know what kind of yield per week. So on these weeklies, ideally for the amount of shares, the 18 million shares, they want to bring in $6 or $7 million, right? Now they can lose sometimes if their Snthetic is doing okay. They don't have to win every single week or win all of it. So that's what goes on behind the scenes there. All right, let me move a little quicker now. So here's our Snthetic position. Nothing really happened, but what I do, let me make sure I did that after I said that. Let me see if I updated these. I've got to open another tab. Hold on a second. Oh, I'm not going to worry about it. It's not that critical to you guys. You care about the weeklies, whether I updated this correctly down here to tell us we have a loss on paper, I know that. The big issue here, guys, is we got a 260 strike and it's 517, right? So we've got 4 more trading days this week and then 5 next. They want to get up there, right? They want to get this $35 off the board. So it's 0, right? Which is a $70 million loss right now. It's okay if this zeros and this zeros, right? Because then they're going to get a slight profit. Now, they've collected money along the way, but we don't want to take that big of a hit. We want to get up close to 260, but we got 9 trading days. All right, let's look at the things that are key. So here we are in holdings. Yeah, I updated all this. Okay. Let me make this larger for you guys so you can see it. So no big deal here. We know they have 18.8. We know it's 650,000 increase. So they're sitting on cash they can use. They haven't really put the positions. These are existing weekly calls, right? 98% are sitting here in this. The only problem with that is it's not that far out, right? So when we look at that again, we're only 4.66. We're at 226, so we can go $10, $11. Well, look at our chart, right? This is an updated chart. So, you know, we don't want it to break out yet. On one hand, we ultimately do, but maybe we don't want it this week. In a perfect world, we want it to stay 237 or lower so it can move up and not hurt these. These aren't going to be hurt at all, but look, they're nothing. They're like 80,000 versus 6.5 million. So we got 6.6 million to win this week. Okay, and what's that on 18 million? Let's go take a look at our tab and then in payments, right? So this is where we set right now in May. We've got a nice little short call income, right? Now we want to collect all that close to 6.6 million. That'd give us 35 cents, right? So we want that. We don't want to lose that, right? And we sure don't want it to run to 242 or 245 and then have a plus money here, right? Where we don't have any cash to distribute. So you always want to be collecting your weeklies when you can. The synthetic will take care of itself. And by the way, Misty has some great news, so don't tune out, any of you that are waiting on Misty. We rolled in advance and we're looking really good in Misty on their synthetic. Okay, there may be something in holdings I want to give you guys. Sorry about rambling on. I didn't update these. But like I said, we're around 65 million in the deficit. You can see it right here, right? The put's going to cost us 70 million to close today, and we've got a 5 million profit in the call. But pretty soon, the call's going to go away, and this is going to hang. So we need the price to get up to 260. And this guy, right, is, you know, this is where we want to make all our money. All right, let's jump over. So I think I covered everything in payments. Yeah, because we're in a new month, right? So there's not a lot there. Let's jump over and get Misty. And there were 3 trades in Misty. Actually, there were a couple. You're going to love this. So the first thing I did was I did the same analysis. This is a one-time thing, right? I'll do it each month to remind you guys, but here's the same thing that happened. So Mr., you know, moved up nicely, 1223 to 1268, 3.74. And so I saw one guy in there on Yahoo Finance saying, yeah, it's too bad. Sometimes we get capped by the sold puts and, you know, the NAV price is down. That has nothing to do with it. First of all, a sold put is a bullish bet, right? That doesn't influence whether we go up or down at the same rate at all. It's only the weekly calls that can get capped, and it's only on the upside. So anyway, it just frustrates me, that's all. But here's what happened. So 3170 is where we closed. Okay, this looks terrible. At first glance, you say, wow, we're really underperforming. No. We just simply had a scenario where they deducted the 250 paid, which is supposed to open at 29.176, and the same kind of thing. It was up in pre-market, but at the end of the day, right, we closed at 30.23, right? And so we were up 3.61%, right? So we just about matched Mr's gain. In reality, it's just the dividend was deducted. All right, I'm on my, let's talk about what kind of trades took place. Well, you rarely see it. I've been doing this for a while, and here's the Misty, right, trades without the puts and calls. So what they did was they rolled, all these happened today. So they rolled out. So normally when they put a synthetic on, they buy calls and they sell short puts. But what they did was they closed out these 1150s, right? So these are where we were, and we made nice money on them, right? Because those are really a low bar after getting killed earlier in the month, right? Where is my, oh yeah, I see. So after getting killed earlier in the month, I'll bring this back as necessary when they put the new 1300s on. So let's go look at the 1150s. So we were setting here, we closed out April with a loss in our synthetic of 4.3 million, almost 4.4 million, okay? And that number's right here. A positive is bad, a negative is good in this scenario. So we came along here yesterday and we sold the position, right? So this time, instead of buying the calls, we sold the calls. So the negative means positive money, and the negative here means we had to buy the put, right? So to close it out, right? But look how little the price was, right? These are the prices. So we went from having a 4.4 million loss to having an 8.7 million gain in our synthetic. Now, if you all remember all too well, okay, and so in a minute I'm going to talk about what the new synthetic is, and we're real close. We got a slight loss, but it's nothing, and we actually gained money on the, actually we got a slight paper gain because we traded higher, but when we posted it inside here, that was a slight loss. But so we don't pay attention to this anymore. This is all closed and done. So let's take a quick peek at our payments, right? This is the one that we lost 28 million on the big one when we rolled it, and then we had that 4.3 in April. So together they constituted a 32 million loss on 3 million shares, which is, you know, it's close to, you know, 10 bucks. It's like $9. So luckily, I thought they were only going to pay us around $2, but they funded it up to $2.50, right? They allowed us to get $2.50. Now we're probably only going to be paid on our short call, and we can build up money here, right? But it's looking good. I'm really happy with where we are at such an early stage, right? So the second position is when they rolled out of those, they always have to have a trade on. So they went to 1300s, and this is just your traditional synthetic, right? They bought 893 contracts. It cost them $247 on the calls, and they sold the same put on July 19th, and it cost them, or they got 236. So it's only $1.01 times 893, right? So it's not much money that they fell behind, right? So but this is considered a booked loss, right? So when you go back over here to my payments, I added these two together. Otherwise, this number would be up in the 8s, right? Would be around 8.5, 8.6. But we have that other booked one that just drug it down a little bit, right? This stays the same. We haven't actually put any weekly calls into play. Okay. So when we look at the 1300, because during the day, these are the closing values, not what they sold up above. So we gained a little bit of money. We're now sitting on 122,000 in a paper gain if we were to close it, right? This represents the loss here that I added to the previous April one. But those were back on the 1100. Okay, I'll go real fast through the holdings. So this is our situation, right? Whoops, I did not update these. I will. I'm not going to take your time to do it. I'll do it on my own. So these are 1300s. We are now sitting on a small little 122,000 gain, right? So all this stuff is kind of inaccurate. Apologize for that. I don't want to waste everybody's time. I'll do it on my own. I thought I had updated this. I did update the net assets, and I did update the shares outstanding, right? And I did update this close, but I didn't drag this number down correctly. Yeah. Okay. I'll get that all in effect for you guys. But super positive, right? Super positive on this. I love seeing this. You know, I always tell people that if I look, after you've done this for a while and you really get to know options, I'm going to challenge you guys to something. And by the way, I'm going to add a Discord soon to I got a lot of requests for my total return. And I kind of said to people when they requested, I said, well, can you like or subscribe? But I think I'm going to start a Discord. It won't cost you anything. It's just a group where I can put files in there and you guys can go inside and we can all share and trade information in there. I'm not trying to monetize it in any way. And sometimes if you do a live, you can have people talk in the Discord as well as in other things. But this is super. This really starts us in a very positive, sorry, and the other one. What I wanted to take you guys through, because Cony has more history, right? So now I can look at any month and I can tell you what the stock did based on knowing what the fund manager's strategy of writing weekly calls and selling synthetic option positions, right? So in January, you had a big loss in the synthetic. That's typical of an environment where the stock is trading flat or only up a little bit and trending down. So you're losing money on your synthetic, right? And they made a little bit of income here, and this was a loss, right? So they only got paid $1.07, right? They had some short call income, and that was $1.57. But because they had this big loss over here, the fund only paid them 2/3. That's what I thought was going to happen to Misty, but they gave it the benefit of the doubt. Whereas a scenario like February, just by looking at that, okay, they got killed on their short calls, right? They lost 90 million, but they made 146. So what that says is that stock took off, right? So coin just super performed and ran right by the 5 and 10% weekly calls, forcing them to lose a bunch of cash by buying them back. But the synthetic that happens once a month made a ton of money, right? So they paid $1.66 in that because they had a $6 loss here, right? But they had a $3.88 gain. Well, that is, yeah, they had a gain, but this was the bulk of the loss, right? So they like to pay on this number. Honestly, they believe the weeklies is supposed to pay the money to give people, and the gravy, the protection, is built into the other one. So sorry I went off on that. Let me know your thoughts on the Discord if you're interested in that as my subscriber count. And thank you for all of my new subscribers and your comments. So let me know what I can do to further let you know. Hopefully the black background, everybody seems to like it on some key things. Okay, that's it. Again, this is Bruce with Targeted Wealth Creation. This is not financial advice. It's for fun and education. Okay, have a great day ahead. Bye.